All right, all right. How's everyone doing? Welcome to the FXStreet live webinars. My name is Navin Prithyani. I am a senior trader from Urban Forex and also the mentor there at Urban Forex. I'm pretty well known in the industry for being a live seven-figure trader. I'm very open about it. I very freely talk about how I do my trades and stuff like that. So lots of videos here on FXStreet. I'm also here as a premium speaker at FXStreet once a month, but every now and then I do a public webinar like this one as well. So welcome to the webinar. So thank you FXStreet for having me here once again. So today we got like 45 minutes together with us. One of the things I like to do, I like to keep the things interactive. So you need to chat and talk with me back and forth as I ask the questions so I know where you are in terms of your knowledge level. Okay? So it's not just attending a webinar and then hoping for the best, right? But it's actually getting down to the nitty gritty and saying, wow, that was some powerful 45 minutes I walked away with. Instead of 45 minutes, 43 minutes of that is some nonsense. And then 2 minutes is like, finally, he says something important, right? So far, so good. You guys agree? Shall we begin? All right, here we go. 40 minutes on the clock. Let's get started. All right, so today's topic is going to be on support and resistance. Now, as we talk about support and resistance, there's some things I want to point out, okay? Let me see if I can get a whiteboard going. Give me a second. Let me see if there's a whiteboard thing in here. Okay. Can everyone see a whiteboard here? Okay, I'm going to draw a circle on the whiteboard. Sorry, where's the line? Here we go. Going to draw a circle on the whiteboard. Yeah, is that visible? Okay, fantastic, fantastic. Okay, that is the largest circle on the planet. 1 second, let me make it thinner. Okay. All right, let me see if this thing works here. All right. All right, it's not the it's not the best thing I thought. I'm going to share my whiteboard with you guys. Give me 1 second here. Okay, screen should be visible, and we'll go to a whiteboard. 1 second. All right. Hi, Oliver. How are you? Okay, here we go. Okay. All right. Is the circle visible for everybody? Yeah. Perfect. Perfect. Okay. So one of the things I wanted to discuss to you guys about is the very, very basics first of support and resistance. Now, why the basics? I'll prove it to you in 5 minutes that the average person does not know what support and resistance really is and how it actually holds value. How it actually holds value. Okay? So here we go. 5 minutes. Take a look at this. If I draw a line down like this and saying the markets are going down, it pulls back, it goes down, it pulls back, it goes down. What's the average response? Well, that's support that became resistance, correct? That's how we draw it, and that's what we're supposed to do. But did you know why does price react from here? Have you seen people say, well, support and resistance is a zone. It's approximately this area from the top to the bottom. Have you guys heard that before? Right? So from my 2009 videos, it's like, we've been talking about support and resistance are like zones. They're not like an exact price range. It's an approximate. Okay, and why? And why? Support and resistance is nothing but a memory. Okay, it's a memory of the market. Okay, so let's start with that, and I'll work your way down onto how to draw it, how to fine tune it, and how to turn it into a strategy that you can use going forward after this webinar. So it's like a memory. If you're buying a product, let's say a car, right? I am going to draw the most beautiful car ever. Okay, here we go. You're buying a car. You go to a dealership, and the guy at the dealership says the car is $30,000. That's the current price you heard. Okay? The car is $30,000, and you're like, oh man, I really want that car, but I don't want to pay $30,000 for it. Okay? Now, this car is hot. Everyone wants this car. You saw it on the news. Elon Musk is talking about it. You know, Bill Gates is like, I got to get me one of those. Everyone's talking about it. You go back to the dealership a week later and you see the car is now $35,000. Okay? 2 weeks later, you go back to the dealership again, the car is $45,000. Okay? A month later, you go to the dealership, the car is $75,000. And you're like, whoa, I wasn't even willing to pay 30. It's become 75,000. The demand is going nuts. Everyone wants a piece of this. Everyone wants a piece of this. And then suddenly people stop buying. Okay? And then when you go to the dealership just a month later, you realize that car is now being offered for $35,000. You're like, whoa, it was just at $75,000. It dropped to $35,000. So if you do this on a chart, this is what it would look like, right? This price point drop, the dramatic the drop is, it becomes a memory. Okay, which means next time when prices start to rise up and people start to buy it again, they will say, everyone's buying it, I want it too. Everyone's buying it, I want it too. Everyone's buying it, I want it too. But the moment it starts getting closer to $75,000 again, everyone says, stop the buying. Last time it was at $75,000, prices dropped a lot. Who in their right mind is going to pay $75,000? We know the store will decrease the price. That memory kicks in. That memory kicks in. Hi, Sarath Babu. How are you? Welcome. Welcome. Is that making sense so far? Okay, I'm just giving you the brief logic about support resistance so far. Okay, this is how resistance is being built. Okay, so far so good? So the way it's being done is the panic that results from a price point move away from a certain area. Okay, that creates a strong price point. Now, here's the thing though. What if from 75,000 the price went down immediately to $10,000? Whoa. Now, the memory is up here at 75. They're like, whoa. Last time it was at $75,000. It dropped so much to 10,000. But why is it that we say support is actually here, but we don't actually refer to that price, that the panic actually started from there? Why is it? Okay, this is the area up here where they call supply and demand and all of that stuff. But then for support and resistance, we love to draw this line because it's aesthetic. It's beautiful. It's visually beautiful to the eyes. And sometimes price does react from there. But why? Why does price react from there? Some of you guys in this room have probably been in the Forex industry or the trading industry for more than 2 years, 3 years, 4 years, and you've been doing support and resistance day and night, but not one, I'm pretty certain, would be able to tell me why. Why does it react from that area? What is the logic behind it? Okay, so let's go into that. Let's dive deeper into that. Okay, why do we draw it like this? And why does price sometimes react so nicely from that area and turn around? Is it a Fibonacci number? Is it a 50% Fibonacci retracement? How do we know he's not going to go up and become 61.8%? Right? So there's that common illusion of, well, maybe I drew my Fibonacci wrong. It's got to be one of these areas, but which one and how do I know? Which one and how do I know? So I want you to keep this in mind. Okay? I'm going to solve that for you in a little bit. I want to ask you one question for all of you guys in here right now. When you're in a market and the market is doing a uptrend, right? It's buying, it's buying, it's buying. It gives you a nice pullback, gets you a discounted price, you know, buy low, sell high kind of thing, right? Then you get in, you start to purchase it and you're like, okay, that's my buy price right there. Can you all tell me, where would you put your stop loss? Would you put your stop loss there? Would you put your stop loss there? Would you put your stop loss here? I'm going to label these 1, 2, and 3. Okay. And how many of you guys would put your stop loss at 4? Okay. So you can have various things running through your mind right now. It's like, generally I put it below my recent low, right? Okay, so below the recent low is number 3. It should be this exact price. Well, what does the average person do? I don't want that exact price. I have to give some space in case it spikes, in case of spread, in case this, in case that. It's psychological, has no merit in terms of the technical analysis, 0 merit. So we give it a buffer, right? So we put stop losses there. Let's say this resistance right here is, you're expecting that to be your take profit. How many of you guys put your take profit there at 1? How many of you guys put your take profit at 2, higher? How many of you guys put your take profit at 3, slightly lower? At 1, 2, or 3? Okay, exactly at the take profit, slightly higher, or slightly lower, if that's where you know the markets are going to react from. Okay, some of you guys saying 1. Okay, the average price, the average person will start reacting from number 3. Why? Because they need to give it that buffer to account for spread in case they're not going to get filled, right? If you're buying, you want to sell, right? You want to sell before everybody else sells, so you know you can get filled. That's why before even reaching this area, people start getting out. People start getting out already. That's how a support and resistance is being built outside of the true support and resistance. Okay, what that means, have a look here. What that means is, if you bought like that, and you're saying this is your take profit, right up there, it won't get up there. People will start exiting from there, there, all of that. This entire area is exit zone. They're going to start getting out before anybody else does, so they know they got out. Otherwise, they'll be stuck holding a position that they can't do anything with. This is why this is true resistance, but support and resistance sometimes ends up here or slightly higher, and so on and so forth. That's how you get a 50% retracement, 61.8 retracement, and so on and so forth. It is the average logic of the public saying, I got to get out. I got to get out before anybody else gets out. Otherwise, I won't get a chance to get out. Does that make sense? Okay. I do this all the time with my students. They come to me, they're like, Navin, I want you to teach me how to trade. I've been in the industry for like 5 years. I know a lot of things. I'm like, okay, you know a lot of things. Let's start with support resistance. Tell me why it happens. Not one ever. Not one student ever can answer that question properly. Okay. So a lot of trading has to do with, do you know trading? Not do you know patterns? Not do you know what you read on a book or saw on YouTube? Do you know trading? Why does certain things happen the way they do? Okay. They don't respond to patterns. Okay. You know, people who are trading, they're not just responding to patterns all day long. They're looking to do what they have to do for their position. If they're in a buy, they want to sell. If they're in a sell, they want to buy. You know, they want to get rid of their positions. Right? So far, so good. So having that knowledge now gives you an idea of, I can draw my support and resistance like that, but I know my real resistance is there. That's my real resistance. But I know people will start getting out earlier, earlier. Having that said, we do get rejections sooner. We get rejections sooner and the market turns. Make sense? Yeah? Any questions on that so far? All right, so that was our 5 to 10 minutes of going into, do you understand what is support and resistance and why is it drawn a certain way? Okay, and obviously now you understand what is true support and resistance. What is the maximum areas where support and resistance will hold? All right, so here we go. Let's proceed from here. Okay, let me open up the chart. Let's take a look at this. All right, I want to zoom in a bit. And I want you to tell me about this. This area is supposed to be resistance right here. That's resistance, absolutely the top, right? Because from there, the market's crashed. Now, there's going to be all kinds of theories behind this now. 50% puts you right here. 61.8% puts you right here. Okay? In terms of Fibonacci. Traditional support and resistance drawers who draw it aesthetically say it's right here is where my resistance is. But yet the price responds there. The price responds there. No one exited sooner on this. No one exited sooner on this. This gives you lots of clues of what is price trying to do. What is price trying to do? Are they trying to go somewhere? Are they in a hurry? Are they not in a hurry? This tells you a lot of information just around support and resistance. There is no, if I draw it like this, what does this mean? If I draw it like that, what does it mean? No. If you do that, you're going to be in trouble. You're going to be in trouble. It's going to be a hit and miss, 50-50, coin toss all day long. All day long, it's going to be a coin toss. Okay? You have to understand how the markets are reacting from certain areas and what does that mean accordingly. And then when it responds to a different area, what does it mean according to that? Okay? You can't come in with the notion saying, okay, that's my holy grail, respond to that and that's it. It better work from there. Otherwise, you know, no helicopter, no Ferraris in the backyard. Right? It can't be so rigid like that. The market is not rigid. It's like a child. A child evolves every day. For the first 3 years of that child, you might be saying, here's a lollipop. I'll give you a lollipop if you listen to me and you do exactly what I say. Here's your candy. The kid will say yes to that, but only to a certain extent. As the kid grows, your candy trick is no longer going to work. That's the same way people are treating the markets. They're trying to force a pattern on it over and over again. Okay? Christian, I hope I'm saying your name right. You're saying, I was taught that banks move the market, not people. It is the sheer collection of everybody that makes the market move. It's the banks, hedge funds, traders, all kinds of people. So if you're in a buy, for example, on this pair right now, the bank is in the buy, you're in a buy, I'm in a buy, and then 40 other people are in a sell, well, it's you and the bankers moving the market. That's basically what it is. You guys won. Okay, it's a collection of everybody. The money has to go somewhere. So even if you're trading $1, it's going in the pool of who's moving the market and which direction. It goes into that pool. Now, banks have more money, so that's a different story. Banks have more money, so they set the direction. Now, here's the thing. Are we trying to set the direction? Because I've never heard a trader trying to set the direction. We're not George Soros here. We're not trying to set the direction of the market and saying, today, I will make the New Zealand go long. No trader I've ever heard talks like that. A trader's job is, I don't care what the price is. My job is, I want to be in, I want to be out. I don't care how much it costs. I need to buy it here and sell it higher. That's a job of a trader, right? And they do this all day long, over and over and over. Short-term players, long-term players, and even very long-term players, all they're doing is saying, I don't care what the price is, I need a spot in, a good location in, a good location out. But they can never say, I am going to move the market. They say, someone show me the direction and I can trade it. Okay? So what needs to be done before trading is you always need to analyze the flow of the market to understand, am I going to be buying today? Am I going to be selling today? Or I was in a buy, but the buys are failing now. I need to be looking at the sells. So your preparation is key. What you do in the mornings before you sit down to trade is absolutely vital. Vital, vital, vital. Let me show you something here. Okay, I'm going to take you guys to my private community here. I'm going to give you a little bit of a outlook here. All right, let's start from the top. Okay. All right. So we got CAD Swiss franc. Okay, I'm trying to see what will be something that should be done for today. This is for August 24th. Today is the 25th. What's the one I'm saying? Okay, here. I'm looking to buy this within the next 48 hours. However, I will be concerned to hold this beyond the highs. This is Swiss franc Japanese yen on the 4-hour charts. Okay, remember, I am not trying to move the market. I'm trying to get into this because I know it's heading that way. Okay, now why it's heading that way, that is a whole different experience level and knowledge level. Right now, we're just simply talking about support and resistance, and I'm going to walk you through this Swiss franc yen. I'm going to show you it on the chart. Swiss franc yen, it's a 4-hour chart, and there's that buy. There's that buy going up right here. Now, I am trying to get in on this, right? And why did I draw it the way I did? Take a look at it. Okay? You see how the prices drop down? I don't know if you guys can see it. Is that visible for you guys? Is that easier to see? Not sure. You know what? I have my other chart right here available. I'll open that. Okay, let me take you to where to go? Swiss franc yen. Okay, Capito, you're saying yes, it's visible? Okay. All right, so what I was looking at is saying, I want to buy this. I've done the research for this. I want to buy this. Okay, that's the drawing I've already had on the 24th when I released it. I want to buy this, but I want to first see already it's reacted from this resistance. Okay, remember, this is the real resistance. This is the aesthetic looking resistance. It looks beautiful there, but we know why people start exiting there already. So it reacts a little bit sooner. Okay, it's a downtrend. He reacts. Okay, then go down. He's not going. Where's my new low? He's not going. Interesting. I further observe it. It goes up, pulls back, goes up, pulls back. Let me see what it does to this resistance. As he goes up, he responds aesthetically first. Nothing happens. Okay, he can go up a maximum here. He goes up, responds aggressively, comes down, and starts slowing down. That's when I decide, sellers, kaput. I want to get in on this buy. Notice I'm not pattern-based trading this thing. I'm trying to read what the larger players, when they're putting in a lot of money, what is actually happening in the market. I'm trying to understand that. I'm not trying to say if A happens and then B happens, therefore I must do C. If I do that, I will not be a seven-figure trader. I would barely even be positive. I'd be negative. Okay? You cannot step into the positive side of the world in trading if you do not understand how to read the market. It just doesn't happen. You can get lucky 5 times, 6 times, 10 times, but not over and over again. It just won't happen. Did this one make sense? How I'm just drawing the support and resistance, giving you an idea of how the turn happens. It's just every time it reaches resistance, it gets weaker. It gets weaker. And that tells me, all right, I want to buy it. Okay, I want to buy it. And now look what happened to the buy. Here is my resistance, right? We went through that resistance. We're on the other side. Whoa. This buy is pretty strong. Right? This buy is pretty strong. He's going places. He's going places. So the target on this is to go up all the way up to this area where the original resistance was on the 4 hours. Up in this area, up in that area, because anyone who's in a buy is going to start removing money before anybody else does. So the first area that it responded, look at this candle. Why did it make a candle like that? Why didn't he go up to my red line that I drew, which is supposed to be the exact resistance? It's because aesthetically looking, people are saying, I want to get out before anybody else does. So some people remove money. It's a profit-taking area. That causes a reaction into the market because a lot of money is being pulled out from the buys. Does that make sense? So if you always keep this logic of what is happening in the world of trading, how do I need to look at it? How do I need to truly use the tools and patterns that are available to me, but really get down to the nitty-gritty of, wait a minute, I keep hearing this word SNR, support and resistance. Wait, stop everything. Tell me why does it happen? Let's start from there always. You want a trend line? Okay, stop everything. Tell me why a trend line happens. Fibonacci, stop the drawing, stop the pattern, stop the strategy. Tell me why a Fibonacci pattern works. If you don't open up the why, it's simply a waste of time. You might as well go have fun and join a casino and just put some money there and at least have some flashing lights and get some adrenaline and enjoy it, you know? But if you're going to do this as a career, you really got to put in the time and effort to understand all the little gears that make the thing move. Does that make sense? Do you guys agree with that? You guys are starting to see why the logic of trading is far superior than a pattern that is being taught all over the place? Yeah? Okay. Let me get rid of these lines because I made it super messy. Okay, let me get rid of this. Oops. All right. That should do it. Cool. Okay, Capito, you're saying you understand? Okay. Christian, you're saying, but can you trade with just a pattern if you're a bad trader? No. You can. Yeah, you can do anything you want, but you won't be profitable. That's the thing. If you do a pattern and pattern and pattern and pattern, or you use an EA and EA and EA, and it's not machine learning, it's not artificial intelligence, it's just a robot that someone built saying, if the price goes above an MA and then your MACD is going up, RSI is down, then you must buy. That's rule-based. Everything is rule, rule, rule. You can't do rules. If I give you a book right now and say, follow these rules and raise your child accordingly, you're going to kill me. You're going to be like, dude, my child has gone nuts. He doesn't listen to anything I say. But then I can show you, oh, but it worked on this child. You cannot put the market into a pattern. It cannot work. You have to learn to read it, observe it, and respond accordingly, just like a human being. Right? If you go to a bar and you talk to a girl and you say, well, this girl's beautiful, but the sentence you always use to say hello to a girl might not be the same sentence you have to use every time. It might not work. It's the same thing. You can't use a pattern on human beings. Okay? And who's trading the markets? Human beings. Right? Sarath Babu, you're saying how to draw support and resistance on a small wick or tail wick. When you say small wick or tail wick, I think also, Sarath, I think you're messaging me privately instead of all participants. If you can change it to all participants so that way everyone can see your messages as well. But when you say small wick or tall wick, I didn't really understand that. Here, are you saying, do I need to draw it up here or at the body? Is that what you mean? Okay, I use the entire area if that's what you're asking. I use the entire area. So for me, up here is the absolute highest resistance. Okay, down here where we draw an aesthetic looking line is where I know between this area and this area, everyone's going to start doing their nonsense. They're going to start either trying to get out early, trying to do this, trying to do that. Whoever's in a buy, and that's their take profit up here, they're going to start trying to get out earlier, just in case. They like to use the word just in case it doesn't go up, in case my spreads, in case this, in case that, I'll get out a little bit earlier. Okay. Ed Peckson, you're saying, so are indicators used? Absolutely. Absolutely indicators are used. But can I ask you one important question? If you're going to use an indicator, you need to know exactly when not to use it. And that can only come when you read a market, when you know how to read a market. I'll give you an example. In this particular chart, right, I am looking at this as I want to buy this. Now, to a traditional person looking at this from here, they would say, I can understand the buy. Look how prices are always above the moving average indicators. I can get that. Why am I saying I want to buy this when it's coming below the indicators? That doesn't make any sense. It's because I'm fully in tune with what the market's telling me. I'm trying to understand what is he trying to, what messages is it giving, and therefore I want to rejoin the trend. And the trend is apparently upwards. Okay, let's take a look at a different example. Okay, it might help a little bit. Let's take a look at a different one. Get rid of that. Okay, so what was the other ones I have? I have Aussie New Zealand, see what happened to there. This one's still developing. CAD Swiss, what happened here? This one's still developing. He's come down already. I need him to now roll over and go up. This one's still developing. Swiss franc yen, we just saw that one's already in progress. Euro yen, already in progress. That one's on its way. Euro New Zealand, still developing. Pound Aussie. Pound Aussie is an interesting one. Okay. Now this one, I see this as a very, very strong buy, Pound Aussie. Okay, I'm going to show you here. Here we go. I'm going to zoom in on the Pound Aussie here. Where'd it go? Here we go. There we go. Pound Aussie. I'm extremely interested in this pair. Consider how I was looking at Euro New Zealand last couple of weeks. It has that look to it. Notice the chart I'm posting 60 minutes. I'm looking to enter possibly today, if not at most tomorrow. Expecting strong higher highs on this pair. Hot pair. Now notice why I'm saying that. Now, to a traditional person who does patterns, for example, a person would say, well, this is a range. If you buy it, you get out here. I'm here saying, I want to go higher on this. I want to go higher on this. How do I come to that conclusion? Okay, that's what I mean to say is you can't just always look at it in terms of an indicator. Like, for example, if we identify this as a range and I do a buy, how do I know I need to get out here? How do I know, well, if this happens, do I get out? Do I hold on? It eventually goes up later. So does that mean I would have been stopped out if I move my stop to break even? Well, what do I do in all of these situations? That is trading. That is the essence of trading. Not in a range, you buy from the bottom, you sell from the top. That is nonsense. Okay? That's just traditional nonsense that's been thrown around. The logic is correct, but it's out of context. It's out of context. Does that make sense? So if I say planes are safe to fly, yes, that is correct information, but it's out of context. Planes do crash, right? But they're safer than a car, maybe. If you give me the context, we'll know more, but it's out of context. The information itself, yeah, it's correct. Planes are safe. Does that make sense? Do you guys understand what I'm saying, where I'm going with this? You guys starting to pick up on it? So for trading, if you really want to become pro, you really want to make some money, like some serious money. Okay, let me show you something. Okay, I think everyone always loves to see stuff like this, right? So let me show you the previous week, August 17th. When I say serious money, I'm talking about trades that you can pull out on a single day upwards of 5 figures. How do you have the confidence to enter a trade with massive size, lot size, if you have no clue what you're doing and you're just hoping it works because it worked last time? That's wrong. That will cause a lot of losses. You need to know what you're doing. You need to know what you're doing. You cannot just shoot an arrow in the dark and saying, well, I know how to hold the arrow, I know how to shoot the arrow, but you can't see anything. That's the problem in a lot of the education that's been thrown around regarding trading. It's a well-kept secret, and I'm glad it's like that. That's why there's a 95.5%, right? Right? Is that making sense? Did I help answer your question, Ed? Are indicators used? Yeah, they're used, but it depends. It depends. Yeah? So it depends on context. It depends on context. Okay? All right. So to touch base on where is one is webinar? Okay, to touch base on everything, I'm going to quiz you guys real quick. Okay, real quick. Where's my true resistance? Here, number 1. Here, number 2. Or here, number 3. Where's my true resistance? Number 3. Excellent. Excellent. Very good. Very good. Now, why does prices react before number 3? Can you guys tell me that quickly? Yeah. Okay. Good. People are afraid. Events, not necessarily events. It's anyone who's buying this and they know they have to target up here, they will exit sooner to give themselves space to make sure they get that price. So for example, if I go to bed and I have a position running, I'll say, you know what, I'll put my take profit here so I know I'll get filled. I'll get something. This is the mentality of a lot of people when they're trading with size. They don't want to miss out. They don't want to turn it into a loss. If you're trading with size, you're always on edge. You have to remember that. You're always on edge. You're not loosely saying, you know what, I'll just put a take profit up here and then I'll just chill, put my feet up in the sky and sip on pina coladas. No, you don't do that when you're trading 50, 100, 200 standard lots. You know, it's not that easy. It's not that easy. You have to be aware of every resistance coming up, everything. Yeah? Okay, so that much you guys now understand. Now, so is this incorrect to draw SNR like that? Is it incorrect? No, absolutely not. That is not incorrect. You can definitely draw it like that. But is it correct for me to say, I bet you the sales will begin exactly from this price? Is that correct way to say it? No, never use that language. That it will sell from here. It has to sell from here. Watch. And then it goes up a little bit and then it goes down. You're like, you see, I told you it's going to sell. No one cares. No one cares. Can you do this well enough to make money? Not to tell somebody else, look, I told you it's going to happen. No one cares, right? So this is the part where you got to get good at and saying, okay, on this one, this is my true resistance here. From here, prices dropped away. And remember that car became a big discount. So when prices go up again, people are starting to buy that car again. Why does it react from here and not aesthetically up here or even up there? Can you tell me whoever was in the buy, whoever's in the buy is already freaking out? That tells you, get ready. Your sells are coming soon. Okay? No pattern, no mystery. You read the market. It's telling you, it's giving you some information for you to acknowledge. It means get ready. The buyers got nothing. If the buyers got nothing, therefore sellers will continue to dominate. Does that make sense? The opposite is true when this seller dominated. When this sell comes down, quick question for all of you guys. If all you guys see, if all they see is that right there, what do you think everyone on every forum on the internet is going to talk about? Buying or selling? What do you think the news will cover? The news will cover today the Swiss franc against the Japanese yen has dropped 400 points and it's just mayhem out there, guys. And then you'll have a controversy, blah, blah, blah. Like the news will report it. Everyone at home looking at their newspapers are like, what's going on in the world? Everyone sitting behind their desk will see this like, I also want to sell. So then there are some now conservative traders that are like, okay, I want to sell, but give me a better price. Give me a better price means get up here and then I'll sell it. Get up here, I'll sell it. Get up here, I'll sell it. I want to see what happens. Prices pull back, pull back, pull back. Okay. Now, here's a thing for all of you guys. When this buy is happening, can you tell me how many candles on the way down? How many candles did it take to reach the bottom? 2 candles. Can you tell me how many candles on the way up just to reach 70% of that? 6 candles to go up. 1, 2, 3, 4, 5, 6, maybe now 7. That's telling you the buyers are a lot slower than the sellers. The sell can happen again. The sell can happen again. When that sell comes in, what's the speed of that seller? What's the speed? Slow or fast? It's fast. All right, we're doing good. Let's go, baby. This is making money. Why did it not break my previous memory where the people started buying from? That memory did not break. Why is he not breaking? Why is he not breaking? Whoever was selling got out. Right? Now, in this process, when he goes up again, it's telling you, get ready, because the sellers got nothing. If the sellers got nothing, could it be the buying will resume for these guys? If I go up one time frame for the daily, could this angle continue resumption? Because people jumped in the wrong direction temporarily. I look for those things all day long. I look for patterns that people like to follow all day long. And the moment people enter in the wrong direction, I'm like, it's coming to me. It's coming to me. Gotcha. And that's trading. That's trading. It's knowledge versus no knowledge, right? And this is why we do these webinars here at FXStreet, right? So this is just a public webinar. Obviously, I do premium webinars with FXStreet as well, where I share a lot more information. Obviously, I'm regularly available on YouTube as well, along with urbanforex.com. If you always want to learn more, I'm always available. You can always reach out to me at Navin, that's Navin, at urbanforex.com. All right, that's all the time we have today, guys. I promise you guys 45 minutes of solid information. I've given you just that. I hope you guys make good use of it. I'm pretty sure this was recorded, and you guys will be able to watch it as many times as you need. Remember, forget patterns, get better at your trading, and you will be a lot better trader than you are today. Thanks a lot, guys. Have a wonderful day. Bye for now.